This is Optimal Living Daily, How Not to Invest $100,000 by Chris Reining of chrisreining.com. And I'm Justin Malik. Welcome back. This is the Sunday bonus episode where I share an extra episode from the OLD network. And today's comes from Optimal Finance Daily. Please do subscribe to or follow Optimal Finance Daily wherever you're listening to this to keep all of this going. It really helps a lot. But for now, let's get right to the bonus episode and Diana's commentary as we optimize your life.
How Not to Invest $100,000 by Chris Reining of chrisreining.com. A friend called me up scared. They've spent the last 20 years working to pay off student loans, buy a house, raise a family, and so saving for retirement wasn't a priority. Where do I start? It was a good reminder. It's easy to forget how confusing and daunting investing is when you're getting started. Which reminds me of a story about a guy who had $100,000 to invest. The first thing he did was buy 20 stocks, putting $5,000 into each. But then he thought he should be making more money and sold those shares to buy Chinese companies. As he learned more about the market, he discovered options and started buying calls, putting $5,000 in and making double that in a day. His gains eventually evaporated. Easy money never lasts. Then he decided to put a concentrated portfolio of growth stocks and put his entire $100,000 into Square at $75. The stock price quickly soared to $100, and he was daydreaming about early retirement. But it wasn't long before it fell back to $75. Next, he read the best way to make money in the current market was to trade the volatility. And so he started day trading his $100,000. He spent hours glued to his laptop screen, sitting there refreshing trades for the millionth time. After all this time and effort, can you guess his return? Down $8,000, including $3,000 in fees. The point is, you can make more money investing and work less at it if you simply buy and hold. That's one of the biggest keys to investing. And here's two more. Number 1, don't buy prices, buy companies. New investors don't think this way. They pull up a stock chart, buy a price, and hope their price goes up. When the reality is, stocks are a piece of a business. Even when you're indexing, that's what your fund is, pieces of businesses. For instance, burrito chain Chipotle had a rough 2017. They faced a string of virus outbreaks, their new queso was called a crime against cheese, and rats were allegedly falling from the ceilings. The best companies in the world aren't immune to problems. The stock price fell from $750 to $250. And if you were investing in prices, you'd probably sell. But a seasoned investor thinks like a business owner. After all, that's what shareholders are, part owner of the business. They ask themselves, are these short-term fixable problems? Do I have confidence in management? Is my money invested the best way it can be going forward? Maybe it's time to sell the stock, maybe not. Some investors sold Chipotle at $250, but on the other side of that trade were buyers who saw an opportunity to own a wonderful business at a fair price. Within 6 months, Chipotle shares had doubled to $500, a 100% gain. Jeff Bezos once said about Amazon, quote, "The stock is not the company, and the company is not the stock," end quote. What he's saying is in the short term, the price of a stock is often disconnected from the company. But in the long term, it always connects. It has to. And number 2, great wealth is built with patience. It's very hard to think long term, but thinking long term will make you a better investor, to have better returns. And that's how you build great wealth. Jeremy Siegel calculated the returns of various assets since the 1800s. $1 in stocks, $1.4 million. $1 in bonds, $1,599. $1 in gold, $3.09. $1 in cash, 4.8 cents. So investing in stocks is one of those things where you can't afford not to do it, but you also can't afford to make big mistakes. And the biggest mistake I see new investors making is thinking day to day, constantly tinkering and tweaking their investments. All the research shows being an active investor is what makes you poor. Therefore, the cosmic secret to building wealth is patience. Warren Buffett said it best, quote, "Only buy something that you'd be perfectly happy to hold if the market shut down for 10 years, end quote. Sure, I'm not immune from wasting time dissecting financial minutia, but when you remind yourself to ignore all the nonsense, forecasts, market chatter, price targets, investing becomes simple, almost easy. And isn't that what you want? To make the most money investing in order to support you and your family without doing any work. It's unfortunate when new investors don't have a good experience. You see them pull their money from the market, vowing to never invest again. Yeah, Wall Street is just a casino. The truth is, the market is one of the best ways to build wealth, but only if you buy companies and have tremendous patience. You just listened to the post titled How Not to Invest $100,000 by Chris Reining of chrisreining.com.
Look around. Smartwatches, Wi-Fi enabled LED bulbs. It's no secret that the world keeps getting smarter, so your e-commerce business should too. Whether you're looking for incredible efficiency or your business has simply outgrown your old shipping solutions, our sponsor ShipStation helps you take the next step. I love that ShipStation's automations allow you to smoothly print shipping labels at the click of a button. This kind of robust automation and reporting, combined with the simplicity of ShipStation's dashboard, make it so easy for anyone to scale their business faster than ever before. And with industry-leading carrier discounts, it's the fastest, most affordable way to ship products to your customers, with discounts up to 89% off UPS, DHL Express, and USPS rates. Unsurprisingly, over 130,000 companies have grown their e-commerce businesses with ShipStation, and 98% of companies that stick with ShipStation for a year become customers for life. Lead your e-commerce business into a smarter future with the shipping software that delivers. Switch to ShipStation today. Go to ShipStation.com and use code OLD to sign up for your free 60-day trial. That's ShipStation.com, code OLD. Good taste is easy to spot, but hard to pin down. You know it when you see it. With your car, you want something sophisticated and daring, yet classic, approachable, but with an air of opulence. That's where the Range Rover Evoque comes in. The Range Rover Evoque is charisma in motion, art and craft in equal measure. Its exterior is a quietly bold expression of Range Rover DNA with a floating roof, continuous waistline, and three-dimensional grille that give it a captivating character. Inside, you'll find a calm, minimalist cabin anchored by a tactile gear shifter where clean lines, sumptuous materials, and advanced technology come together. Make a statement in the Range Rover Evoque. This elegant SUV elevates every drive, offering a new dimension of refinement and luxury. Whether you prefer a modern aesthetic or a warmer, authentic appearance, the Evoque's interior can be tailored to your taste. Ready to experience sophisticated design and premium materials in motion? Explore the Range Rover Evoque at LandRoverUSA.com.
Chris's story about the man playing around with $100,000 reminds me why I'm a long-term passive investor. Picking individual stocks, day trading, and spending that much time and energy on an investment portfolio sounds a lot like a job to me. And an unnecessary job at that, as more often than not, all that work doesn't amount to better returns for most people. I'm investing to put my money to work, not for me to take on another job. Active investing and day trading is what many people think of when they think about investing. I know I once did. While the life of an active investor might look sexy and glamorous, this is not what it looks like for most of us who are investing for retirement. Investing has always intimidated me. It seemed complicated and risky, and most of all, daunting to learn how to do it. Luckily, I came across resources like the book The Simple Path to Wealth by J.L. Collins and learned about passive long-term investing in total market low-fee index funds. And it finally clicked. Now I know that I don't need to try to beat the market to reach my financial goals. I just need to match the market. Now I don't stress about the stock market's natural pattern of rising and falling because my money is going to be riding that roller coaster for a long time. I don't need to watch it constantly. And because I don't invest money that I'll need to use anytime soon, I don't miss it. I can leave it alone to go do its job making more money. That should do it for another edition of Optimal Finance Daily. I'll be back tomorrow as usual, so I'll see you there on the Wednesday show, where your optimal life awaits.